Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Workers' remittances continue to provide critical support to Sri Lanka's external sector, particularly at a time when tourism and exports face external pressures. The latest figures shows that inflows reached a record level in July, extending a strong recovery that has continued since the economic crisis. This has further strengthened remittances as a key source of foreign exchange for the country. Workers' remittances reached a record high in July 2026, continuing a strong performance during the first 7 months of the year. According to the latest Central Bank of Sri Lanka data, remittance inflows increased 11.51% year-on-year to $777.6 million in July. This surpassed the previous July record of $697.3 million recorded in 2025. It was also a 12% increase from June 2026, when inflows stood at $695.02 million. The July inflow was among the strongest monthly performances on record, although it remained below the $846.9 million recorded in May 2026 and $814.7 million in March 2026. Looking at the first 7 months of the year, cumulative remittances exceeded $5.38 billion, an increase of 21.4% compared with the corresponding period of 2025. This marks the strongest January to July remittance performance in Sri Lanka's history. The strong inflows are particularly important as export earnings and tourism face external pressures. Remittances have therefore become a critical source of foreign exchange, supporting external reserves and broader macroeconomic stability. The latest performance follows a record year in 2025, when annual remittances increased 23% to $8.07 billion, the highest annual inflow recorded in Sri Lanka. The recovery has been particularly significant since the 2022 economic crisis, when remittances fell 31% to $3.78 billion. Inflows then rebounded strongly, increasing 57% to $5.96 billion in 2023, followed by a further 10.1% increase to $6.57 billion in 2024. The continued growth despite economic uncertainty and the ongoing Middle East conflict highlights the resilience of Sri Lankan migrant workers and the continued importance of formal remittance channel to the country's foreign exchange position. Sri Lanka's finance company sector is expanding rapidly, with lending growth driving a sharp increase in total assets. At the same time, profitability is improving and asset quality has strengthened, providing a more positive picture of the sector. However, the pace of lending growth also makes funding and credit quality important areas to watch. Sri Lanka's finance company sector recorded strong growth in the year to June 2026, with total assets increasing 41% year-on-year to 3.2 trillion rupees. According to the latest Central Bank of Sri Lanka data, the expansion was mainly driven by a sharp increase in lending. The sector's loan book grew 47.8% to 2.6 trillion rupees by the end of June 2026. Meanwhile, other investments increased 19.7% to 434 billion rupees, while other assets rose by 25.9% to 148.6 billion rupees. The strong balance sheet growth was supported by high funding. Total deposits increased 22.9% year-on-year to 1.43 trillion rupees. At the same time, borrowings for on lending more than doubled, rising 124% to 1.05 trillion rupees. This indicates that borrowed funds alongside deposits played an increasingly important role in supporting the sector's rapid lending expansion. Meanwhile, equity capital increased 13.4% to 578.2 billion rupees. Earnings also continue to improve, although at a slower pace than the overall expansion of the balance sheet. Net interest income increased 27.6% year-on-year to 72.7 billion rupees. Profit before tax rose by 17.4% to 39.9 billion rupees, while profit after tax increased 16.4% to 21 billion rupees. On a positive note, asset quality also strengthened alongside the expansion in lending. Gross non-performing loans declined to 5.1% at the end of June 2026 from 8.3% a year earlier. Stage 3 NPLs also improved, falling to 3% from 4.5%. Overall, the latest figures point to strong balance sheet expansion in Sri Lanka's finance company sector, supported by rapid lending growth, improving profitability and a reduction in non-performing loans. Foreign investor activity in Sri Lanka's government securities market is showing renewed strength, with overseas investors continue to increase their holdings of rupee-denominated bonds. The latest inflows come as the rupee has recovered from its sharp depreciation earlier in the year. The trend provides an important signal for foreign investor confidence and Sri Lanka's financial markets. Foreign investors recorded their 8th consecutive week of net purchases of Sri Lanka's rupee-denominated government bonds, according to the latest central bank data. Foreign investors bought a net 4.04 billion rupees, or around $12.2 million during the week ending 7th August 2026. This extended the cumulative net foreign inflow into government securities to around 71.5 billion rupees, or $216.7 million since 19th June 2026. As a result, foreign holdings of government securities increased to 192.9 billion rupees, the highest level reported in the central bank's weekly economic indicators. The renewed foreign buying comes as the Sri Lankan rupee has recovered from its sharp depreciation earlier in the year. The rupee's selling rate reached around 354 rupees to the US dollar on 21st May 2026 before recovering towards the 340 rupee level. However, the rupee remains 7.6% weaker against the US dollar through 7th August 2026. According to the report, higher oil and vehicle imports, together with the continuing Middle East conflict, contributed to the pressure on the currency. Meanwhile, foreign investors have recorded a total net inflow of around 51.5 billion rupees into rupee bonds so far in 2026, compared with a net inflow of 71.5 billion rupees during 2025. The latest inflows come despite increased global uncertainty and concerns over economic growth linked to the Middle East conflict. Analysts said Sri Lanka's early deflationary policies had supported foreign inflows by limiting imports. However, inflationary pressures have increased in recent months following a gradual increase of nearly 50% in fuel prices. In response to rising inflationary pressures, the central bank increased its key monetary policy rate by 100 basis points in May 2026. Before that increase, policy rates had remained unchanged since May 2025, following cumulative reductions of 825 basis points over 24 months from June 2023. Despite the depreciation of the rupee and renewed inflationary pressures, continued foreign purchases of rupee bonds indicate sustained investor interest in Sri Lanka's government security markets. Private sector borrowing from the banking system accelerated in June, extending the credit recovery seen in May. Total outstanding credit increased by 245.3 billion rupees month on month, reaching 11.28 trillion rupees. On a year-on-year basis, private sector credit grew by 27.4%, remaining close to the 27.8% growth recorded in May. According to the latest Central Bank of Sri Lanka data, this reflects a 2.2% monthly expansion from the 11.04 trillion rupees recorded in the previous month. The continued credit expansion occurred despite the CBSL raising monetary policy rates by 100 basis points in late May. This was the first rate increase since March 2023, taking the overnight policy rate to 8.75%. The rate hike was aimed at controlling credit-driven import demand as pressure on the rupee increased amid the Middle East conflict. Following a gradual depreciation earlier in the year, the Sri Lankan rupee ended 7.6% weaker against the US dollar by 7th August. Domestic banking units lending increased by 2.2% over the month to 10.7 trillion rupees in June. Meanwhile, credit extended through offshore banking units increased by 1.8% month-on-month to 579.2 billion rupees. However, despite this monthly growth, overall offshore banking units credit remained 3.4% lower than the same period last year. In contrast to the private sector, net bank credit to the government declined in June. Government borrowing from the banking system fell by 2% month-on-month to 8 trillion rupees, marking a 5.8% contraction year-on-year. Government borrowing from the banking system fell by 2% month-on-month to 8 trillion rupees, marking a 5.8% contraction year-on-year. This reduction included a decline in credit from both the central bank and commercial banks. Outstanding credit to public corporations and state-owned enterprises rose by 3.3% over the month to 509.6 billion rupees. Despite this monthly increase, overall credit to state-owned enterprises remained 20% below the levels recorded a year earlier. Finally, CBSL data showed that broad money supply growth slowed slightly, expanding by 11.5% year-on-year in June compared with 12% in May. Overall, the data highlights strong ongoing credit demand in the private sector, even as government borrowing from the banking system continues to decline. Let's take a look at this week's Treasury-bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 9.44%, down by 33 basis points. The 182-day T-bill rate stands at 9.78%, down by 21 basis points. And the 1-year T-bill rate stands at 10.01%, down by 18 basis points compared to the previous week. Thank you for watching. We'll be back next week.